Hi friends, very good evening all of you. Today let us discuss Accounting Standard 10 Property, Plant and Equipment. As I told you earlier, Accounting Standard 10 is the most relevant and important accounting standard even from your practice point of view. Think about it. Come out of your classroom, imagine you are conducting an audit, or imagine you are an employee of a company. When you conduct an audit or when you prepare financial statements as an employee of an organization, imagine, can you, even in your dream, can you imagine an enterprise which is not having any non-current asset in its balance sheet? So can you see balance sheet of an individual or balance sheet of an organization, balance sheet of a company without any fixed assets? Just imagine the balance sheet without fixed assets, how incomplete it will be. So can I prepare my personal balance sheet without assets? No. Without capital? No. So even if you take a small business also, even if it is, like how I say, it could be a tea stall, it could be a bakery roadside. Okay, even those people will have fixed assets. Small businesses also will have fixed assets. So irrespective of the nature of the enterprise, the industry it is operating in, the level of activity, whether it is into manufacturing sector or into trading or into finance or into banking or into insurance or whatever the primary activity of the business may be, whether it is for profit or whether it is not for profit, whatever it is, we cannot imagine an organization, one, without revenue, two, without assets. That is the reason Accounting Standard 9 and Accounting Standard 10 are the most interesting and important standards, because there is no enterprise without revenue. So AS9 is applicable to everyone. There is no enterprise without assets. So AS10 is applicable for everyone. Now the question is, theoretically or traditionally, when you study 11th class or 12th class or when you are in BCom, probably, I'm not saying that this happens in every school, every college, probably your lecturer might have told you a recognition criteria which is outdated now. For example, in your 11th class, 12th class or BCom, you might have studied that if you spent huge amount of money towards development expenditure or towards branding or towards promotion or product launch, which gives you a future economic benefit of 3 to 5 years, that can be deferred. It should not be charged to P&L in 1 year. It should be deferred and it should be charged to P&L between 3 to 5 accounting years, is what probably your teacher might have told you, which is outdated. And today, being a student of a professional course like chartered accountancy, cost accountancy, you cannot do that. There is nothing called deferred revenue expenditure. If you read Accounting Standard 26, any research cost, or any cost incurred towards marketing, business promotion, business development, or this product launch expenses, even if they are huge campaigns, whatever the expenditure is, close your eyes, charge it off to P&L account, expense it off. These kind of expenses cannot be capitalized. Now, one student was asking me in one of the previous classes, in some physical class, one student is asking me, why cannot I capitalize my research expense? Of course, that was a different discussion. We'll do that in Accounting Standard 26. I told him one interesting thing. Do you know, in USA, where USA is the hub of research globally, right? The highest level of research happens only in US. If you look at the whole world, I know, see, if you observe, China considered to be the manufacturing capital of the world, US considered to be the technology capital of the world, UK is considered to be the finance capital of the world. It is very interesting. If you go global and if you have international dimensions, if you know the dynamics, then you understand these things. And do you know what India is famous for? India is famous for startups, not only fintech companies, financial technology, but many types of startups. And today, out of accounting, nothing related to accounting, I'll tell you one thing, okay? try to read about Industry 4.0 and Industry 5.0 globally. What is Industry 4.0 and Industry 5.0? India is becoming a superpower because they are simultaneously doing Industry 3.0, 4.0, 5.0. That means, robotics, manufacturing, heavy scale, large scale manufacturing, developing the resources, then technology, then this artificial intelligence, then erasing the boundaries of cyber and physical environments. So all these things combinedly we are able to do it. So the two promising places, two promising geographies for the future are one India, two Africa, because they're growing like anything. Chalo, coming out of that, I was telling the student that US is the hub for research and development. The biggest, largest scale research happens in US. But do you know, as per US GAAP, forget about research cost, even development cost cannot be capitalized. Can you believe? So research and development cost also cannot be capitalized in US. But according to IFRS, Ind AS and accounting standards prevalent in India, development cost can be capitalized if it satisfies some criteria. Okay. So now, Pavan sir, when we are speaking about property, plant and equipment, what is the recognition criteria? What is the recognition criteria? So you might have studied earlier that, an asset is something which is held for use. A fixed asset is something which is not held for sale. A fixed asset is something which is intended to be used in production of goods or, while rendering services, which has an economic life of more than 1 year. All this blah, 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 you might have studied. Even in accounting standard 10, PPE, even in definition, we have studied that. But try to understand assets can be, there can be so many types of assets. There can be, assets can be classified into many things. But I'll tell you, prominently, if you are speaking about an asset, it can be a current asset or it can be a non-current asset. Correct? That is the criteria given in Schedule 3 also. So basically, an asset can be current asset. An asset can be non-current asset. Okay. If it is current asset, there are again many types of current assets, but prominently one, major category of current assets is inventory. Okay. Then accounts receivable is there, then cash and cash equivalents is there. So all these things are there, but prominently it is inventory. Then in non-current assets, when you come to the other side, non-current assets, there are two prominent items. One is tangible assets, another one is intangible assets. But of course, there are investment properties and investment in stock markets also, real estate investments and financial investments. All these things are there. So basically, an asset can be an inventory. An asset can be investment property. An asset can be a tangible asset, like furniture, fixtures, then land, building, machinery, motor vehicles. An asset can be a tangible asset or an asset can be intangible asset. Again. It can be inventory. It can be investment. It can be a tangible property or it can be an intangible asset. Correct? Try to understand one thing common in the framework of accounting when you are recognizing an asset. I'm not speaking about what asset it is. It can be inventory, it can be investment property, it can be PPE, or it can be intangible asset, or it can be any other financial or real asset. Basically, to recognize an asset, it should be a resource which is controlled by the enterprise. It is a resource which is controlled by enterprise. So say, for example, I have a mobile phone in my hand. Can I say that this is my property? When can I say that? Simple. If I have the legal or contractual right to derive the future economic benefits of this mobile phone, that is the point I can say that yes, this is my asset. So simple. To claim that something is your asset, it should give you future economic benefits. To claim that it is your asset, it should give you future economic benefits. That means something which will not give you future economic benefits is not your asset. As simple as that. If this thing gives me FEB, future economic benefits, this is my asset. If this thing is not giving me future economic benefits, this is not an asset. Full stop. Step one. Step two. Okay, this gives me future economic benefits. Is it current asset or non-current asset? Is it inventory or PPE? Simple. Are you thinking of selling it and get future economic benefit? Or are you thinking of using it and gain future economic benefit? That is the question. Pavan sir, I have a car. I have this car. My intention is to use the car and get the economic benefit. I am a chartered accountant. I go to office in this car. Very good. Pavan sir, I am an engineer. I go to my project site using this car. Very good. Pavan sir, I have a taxi business. I use this taxi to run my business. Very good. Pavan sir, I'm an employee in bank. I go to my office in this car. Very good. Fair enough. In all these cases, your intention is to get the benefits from this car by using it. So you do not have intention to sell it. So that is your fixed asset. Pavan sir, I am a car dealer, second-hand car dealer, or I am a first-hand car dealer. I buy cars and I sell cars. That is my business. Because your intention is to sell it to get the future economic benefit, it is your inventory. So basically, what is the difference between inventory and PPE? What is the difference between inventory and PPE? The intention to sell it or to use it. Pavan sir, I want to sell it to get the future economic benefit. That is your inventory. Pavan sir, I want to use it and get the future economic benefit. That means it is your long-term asset. If you ask a third standard or fourth standard, student, whether it is a long-term asset or a short-term asset, he doesn't know that the classification should be based on the intention. So he will tell you based on nature of asset. For example, you look at the building and say, this is a non-current asset. Idiot you are. You're not a third standard, fourth standard guy to tell that, okay, current asset, non-current asset can never be decided looking at the nature of the asset. It could be an aeroplane or a ship which is worth 500 crore rupees, which is worth 10,000 crore rupees, which is worth 100 crore rupees. But if you are buying, if you are selling these, that is inventory for you. So it is not the nature of asset. You cannot say building a non-current asset. No. Building owned by a businessman that is used for his corporate office or factory is a non-current asset. Building held by a real estate broker with an intention to sell it is a non-current asset. Car is a non-current asset. Wrong. Car held by a person intending to use it to get the future economic benefits is a non-current asset. Car held by a person who is intending to get future economic benefits by selling it is an inventory. Clear? So whatever the asset is, first criteria is it should give future economic benefits to you. Whatever the asset is, it should give future economic benefits to you. Point number one. Point number two. I use this question commonly in all my classes. Okay. Do we have brain? Yes. Okay. I don't know about you, but I have a brain. Okay. I have head, brain, both. Okay. So I know you also have, whether you use it or not, but we have. Okay. So do we have brain? Yes. So is my brain useful? Is my brain useful in earning future economic benefits? My whole life is dependent on my brain and knowledge, isn't it? I am earning my bread and butter using this only. I earn money in stock markets using this. I teach using this. As a consultant, I give advisory using this. I do accounting and finance using this. So without brain, I cannot earn any money because I'm not doing any physical job. I'm doing job only with brain. So My brain gives me future economic benefits. Can I recognize my brain as an asset? The answer is no. So first condition is future economic benefit. First condition is future economic benefit. Good. Second condition is this is measurement concept. The amount incurred to acquire or develop this asset should be measurable. Cost should be measurable. Cost should be measurable. Pawan sir, I bought a Mercedes Benz car and I have paid 52,50,000. Very good. Can I capitalize it? Excellent. Yes. Pawan sir, I have bought an iPhone 14 Pro Max by spending 1 lakh 32,000. Can I capitalize it? Yes. Pawan sir, I have purchased a building 4 crores. Can I capitalize it? Yes. But the problem with my brain or any internally generated assets like goodwill, how can I measure it? There is no measurement concept for this. Cost is not incurred, it is developed. Goodwill, in case of internally generated goodwill, it is developed over a period of time. It has so many efforts invested in it which cannot be measured. For example, ethics, promoters, integrity, corporate governance, corporate social responsibility. These are the reasons which have driven goodwill, not just profits. Isn't it? So can you measure all these things? No. Your character gives you a lot of goodwill. Can you measure? My brain to become this, how many dozens of or hundreds of or thousands of hours since my childhood or while grooming to be a budding professional or after becoming professional or after becoming a teacher, how many hours of effort I might have invested with books, with thinking. How did I churn? How did I nurture? How did I groom myself to be this? So can I measure that in terms of cost? No. So how can you capitalize brain? You cannot. How can you capitalize internally generated goodwill? You cannot. So that is the reason, my dear friend, remember, accounting standard 10 property plant and equipment has given you 2 rules for recognition. Checkbox 1, whether this particular resource gives you a probable future economic benefit. Probable here means more likely than not. That means the probability of occurrence is higher than the probability of non-occurrence. That means at least with a confidence level of 51%, with a confidence level or gut feeling we call of 51%, you can say that yes, this gives me future economic benefit. Remember, future economic benefit need not be profit. Future economic benefit need not be cash flow. Future economic benefit need not be profit. Future economic benefit need not be cash flow. Future economic benefit can be value created by using the asset. It can be value created by using the asset. For example, in my studio, I use a camera to record the classes, and the camera is, just maybe it is some 60,000, 70,000 rupees. So can I capitalize it? The answer is yes. So am I earning any cash flows directly from it? No, but the value it creates, if it is not there, can I record a class? No. So I have one air conditioner. Can I capitalize it? Yes. Will it give profits to me? No. Will it give cash flows to me? No. Can I capitalize it? Yes. Because please do not think from a very narrow mind that future economic benefit means cash flow. No. Who said future economic benefit is cash flow? Who said it is profit? It is the value created by the asset to the enterprise when the enterprise uses the asset. You understand? Sometimes you have pollution control equipment, fire extinguishers, fire alarms, safety equipment. Do you think they contribute in cash flows? No, they are for the safety. probably in your 40 years of life, your building is 40 years old. In your 40 years of life, you might have never used fire alarm. You might have never used fire extinguisher. Good. I'm happy for you that fire accident never happened in your place. But still it is an asset. Pavan sir, it never gave future economic benefit to me. So what? What is the value created by it? Not just from compliance point of view that you will not get industrial license or the building license unless fire safety is there, but think the value it creates to the business. So rule number one, there should be a probable future economic benefit out of this resource that comes inside, inflow to the enterprise. Point number two, the cost incurred to acquire it or to develop it should be measurable, reliably measurable. I have constructed a building. I know how many bricks were used. I know how many laborer worked for how many hundreds of hours. I know how much I've paid to them. I know what are all the overheads incurred. I know all the type of expenses incurred, including, the apportionments. Everything is clearly evident and known. So I can do some costing as per generally accepted costing principles, or as per accounting standard 7, or as per accounting standard 2. Then I can calculate this is the value of my building, reliably measurable. So what is one? The cost of an item of PPE should be recognized as an asset. See the phrase, see the phrase, see the phrase. If and only if. Two phrases in accounting. One is if and only if. Second one is when and only when. When and only when tells you the point at which it is to be recognized. If and only if will tell you on satisfaction of what conditions you can recognize it. So first one is, it is probable that future economic benefits associated with the item will flow to the enterprise, future economic benefits. And the second one, excuse me, hello. So first one is, hello, where are you? Where are you? Yes, this one. It is probable that future economic benefits associated with the item will flow to the enterprise. 1. 2. And the cost of the item can be measured reliably. Oh my God. These are the items. Okay. Now, look at problem number 1. Illustration 1. Entity A supermarket chain, okay, is renovating one of its major stores. Now the question is whether this renovation expense can be capitalized. Whether this renovation expense can be capitalized. Look here. The store will have more available space for in-store promotion outlets after the renovation. Enough. Close your eyes. Capitalize it. Clearly they are saying after this renovation, I will have more space. Means more economic benefit. And it will include a restaurant. You are opening one restaurant counter also. Obviously, sales will increase. Management is preparing the budgets for the year after the store reopens, which include the cost of remodeling. Okay, remodeling is costly, and expectation of 15% increase in sales. Oh my God. Resulting from the store renovations, which will attract new customers. State whether remodeling cost will be capitalized. Obviously, it can be capitalized. I'll tell you one more interesting thing. What if sales will not increase? What if sales will not increase? Even then it can be capitalized. Increase in sales need not be a condition here. Imagine previously you have in supermarket the aisles, the passage, the corridors are very narrow and customers are facing problem. For example, there are two racks this side and this side. One female is buying something from here and one male is walking through there and they cannot pass easily. They have their shopping carts. They cannot pass easily. The businessman understood that this is not how I want it to be. So he renovated to ensure that there is more passes in between. Sale will not increase by 1 rupee also, but now customers are happy. It is giving you, a kind of, like, I can say quality, I can say customer satisfaction. Pawan sir, I have spent 1 crore rupees for this, but I do not think because of this sales may increase. Can I capitalize? Yes. Something which increases revenue, you can capitalize. Something that reduces cost, you can capitalize. Something that will increase the quality, you can capitalize. Something that can reduce the process time can be capitalized. Something that reduces the defective rate can be capitalized. Something that increases the efficiency can be capitalized. Something that enhances the productivity can be capitalized. Something that reduces the rate of customer complaints can be capitalized. Something that helps you in building brand can be capitalized. So they have given that there will be a 15% increase in the sale. Can it be capitalized? Yes. That doesn't mean if that 15% growth is not there, I cannot capitalize my this renovation cost. That is the reason I tell you, accounting is a very funny subject. Okay, the more practical exposure your lecturer has, the more practical exposure your lecturer has, the more you enjoy the subject. Pawan sir, if you have practical exposure, how will I enjoy the subject, Pawan sir? Simple. The point of view, how you look at it, will completely change. For example, how Rajamouli looks at something, how James Cameron looks at something, or how, I admire Ram Gopal Verma, so how Ram Gopal Verma looks at something, how Christopher Nolan looks at something. Obviously, based on that, we enjoy the movie more, no? Because their vision, their exposure, their creativity and ability will bring beauty to the output. So I always have seen, when I teach finance, when I teach accounting, students will be more involved because of the link I give, to the subject, to the theory with the industry. So you should understand the subject beyond this just textbook. At the same time, you should read the textbook and understand that also thoroughly, because this gives you marks, that gives you skill. Okay, this gives you marks. Connecting with the industry gives you skills. Okay, so let us see the answer. The expenditure in remodeling the store will create future economic benefits in the form of 15% increase in sales, and the cost of remodeling can be measured reliably. Therefore, it should be capitalized. This is the most appropriate answer, but don't come into a perception that if that increase in sales is not there, it cannot be capitalized. Nowhere it is stated like that. Nowhere it is stated like that. So you understand what is the definition of asset, what is the recognition criteria, and we have seen one problem on this. Okay, any doubts up to this, whatever we have discussed?